Hi traders, welcome back to another video. Today I want to start a new YouTube series, and this series is going to be kind of a strategy development investigation kind of process where I'm going to go and find strategy ideas out on the web, on the internet. I know how dangerous that sounds, but don't worry, we're going to vet these ideas using code and running trading ideas through the strategy tester. And the whole purpose of this series is one, I'm doing it anyway. It's something that I do in my spare time anyway. But two, hopefully it will give me a good opportunity to show you guys, demonstrate to you guys some coding practices, techniques, concepts that are practical, that we can build on. And hopefully this series, these videos that I'm going to start creating over the months and probably years to come will help inspire you guys and motivate you guys to go and find your own trading ideas, convert them into code, adapt them to suit your personality, your personal trading style, and we can all become better traders together. Now, as mushy as that sounds, that's the whole purpose of my YouTube channel and what I do here. I'm a trader. I want to get better at trading. Why not share the journey with you guys and we can all get better together? And so without further ado, let's get into today's video. It's going to be a bit of a longer one compared to the recent videos I've done, but I think it's going to be extremely valuable. Recently, I've been going through a mentorship program with Nick Raj. He's an Australian trader, quite well known. If you haven't heard of him, go and check out his Chat with Traders podcast episodes. They're brilliant. They have some really, really powerful trading ideas and lessons included in them. I'll leave links below in the description. This morning, I was just going through the forum here and reading up on some trading system articles that Nick Raj particularly has posted. There's other students that post strategy ideas, but I'm always very interested in what Nick Raj finds interesting because he is such a great trader. I like to try to emulate his thought process in the markets. I have a very similar philosophy on the markets to him. He's obviously far, far more experienced than I am. He's been trading for decades. I've been trading for maybe 5 years actively. But this post here caught my eye this morning. So Nick posted this video here by JB Marwood, the YouTube channel JB Marwood. Now, I don't know anything about Joe, but I did watch this video today and I was really impressed by the concepts here. And so today I wanted to convert some of these ideas into PineScript, show you guys how to build out a simple strategy script to test an idea, a trading idea in Pine. So before I get started, hopefully Joe doesn't mind me doing this. I'm obviously giving a shout out to his channel. Go and check it out. There's some really cool trading ideas here, some really powerful stuff. Today, I want to go over his simple pullback trading strategy and convert the idea, the rules, into Pine. And when we're done, we'll get something like this. Now, my results aren't 100% accurate compared to his results, but that could be because he's using different data to me. He's using a different backtesting software, but the results are similar enough and profitable enough to warrant investigating in PineScript. So before I get started, I'll play a short clip from his video just to demonstrate the rules that he lays out. And again, when you finish with this video, or even now if you want to, I'll leave a link below in the description to this video. I definitely encourage you to go and watch the whole video because there's some really important ideas that are laid out in this video. But anyway, let me break down his rules. And again, hopefully he's okay with this. If you ever see this video, Joe, and you're not happy with me basically stealing your work, let me know and I'll take this video down. But I just want to share this with my audience because I think this is really important information and an important template that traders should be aware of. Traders, especially my experience, I obviously have a lot of traders come through my mastery course. There's a lot of questions I get where traders are overcomplicating trading in a way that I feel is unnecessary. Trading does not need to be very complex in order for you to make good money out of the markets. And this strategy right here is a good example. So let me skip forward to the rules here, and I'll just play a quick clip from this video.
Right, now let's look at the exact rules of this simple pullback strategy. So the buy rules, first of all, we're going to want a close above the 200-day moving average and a close below the 10-day moving average. So very basic rules. The longer term trend is the 200-day moving average. We want to be above that, but we want to close below the 10-day moving average. So we've got a small pullback within the longer term trend. Now the sell rules are extremely important here. We're going to sell when the close rises back above that 10-day moving average. So we're not looking for long term trades here. We're just looking for short-term trades, short pullbacks. And the other rule is we will sell if we get a 10% loss. So if we get a 10% loss, we're going to exit on the next bar open. Okay, we need some more settings that we can put into our backtester so that we can run an accurate backtest. So position size, we're going to use just...
All right, I'll stop it here. I don't want to play too much of his work on my channel. Again, go and check out this video if you're interested. So the rules are incredibly simple. We're waiting for price to close above the 200-day moving average and close below the 10-day SMA, simple moving average. That's it. The buy rules couldn't be simpler. That's something I really love about Nick Raj's work in his books and his videos online. He's a huge advocate for using simple and robust trading rules. He goes so far as to say that he doesn't believe that the entry reasons or entry criteria for strategies is a very important aspect of a trading system. There are other aspects of a trading system that are far more important, such as the overall concept of the system, why it makes money, and obviously your exit reasons are super important, and your money management, risk management approach plays a massive role in the profitability of any trading system. The entry criteria is one of the least important criteria. It's not important, but it is one of the lesser important aspects, especially when we're trading a robust system. So this strategy is extremely simple. We're waiting for the entry rules here, and then the sell rules are also very simple. We're waiting for the candle, the bar, daily bar. This is a daily long only strategy, by the way, on the S&P 500 ETF. That's what this strategy was designed to be traded on, but in my preliminary testing, it seems to be profitable on several other markets as well. But anyway, the sell conditions are, once we're in a trade, if price closes above 10-day SMA, we exit our position. We're just trying to capture small chunks of the overall long-term trend. The secondary rule is that if price declines by 10% from our entry price, or in other words, we have a 10% loss on a closing basis, we exit on the next bar's open. We have a position size of 100% of our capital. No leverage is used. Starting capital in this backtest is $50,000 US. Commissions is 0.005 cents per share, which is the interactive broker rate. And execution is entering trades on the next bar's open, which is luckily how the TradingView strategy tester works. So that's really easy to emulate in today's lesson. So let's jump into the Pine editor and start coding this into Pine code. Now, before we do that, I should probably mention the overall metrics of this system. According to Joe's backtesting using Amy Broker, which is a much more powerful strategy tester system than TradingView, but it's also much more complex. I might consider exploring Amy Broker code in future lessons if you guys are interested in that. I'm learning how to code in AFL, the programming language for Amy Broker. It's a very powerful program, but it is also much more complex than Pine. There's pros and cons to that. The pros are that you can do very extensive statistical analysis of your strategy results over historical data. The cons are it's expensive. You need extra data, so data from a data provider. And the code is just harder to learn compared to Pine. But anyway, that's irrelevant for today's video. So the metrics here have a decent annualized return, but it is less than buy and hold. So buy and hold returns on average about 10% per year on the S&P 500. This strategy returns about 7.6%. So it's less profitable than just simply buying and holding the SPY ETF. However, look at our maximum drawdown. The max drawdown of just holding the S&P 500 ETF is 55% of your capital. So you lose over half your capital by just doing nothing and holding the ETF. But you do make about 10% per year, which is okay. But this would make a lot of investors uncomfortable, and I'm sure a lot of traders and investors would sell as you near that max drawdown, and then that will affect your annual return negatively. And so there's a lot of psychological reasons why buy and hold is not a good strategy, despite the fact that it does have a 10% return on average per year. Whereas this system has a slightly less return, but look at the max drawdown, 12%. I would take a max drawdown of 12% any day of the week on any strategy. That is well within my risk tolerance. And so that's kind of the idea of this strategy. It has a much better risk-adjusted return than buy and hold. And it also has a very high win rate. 75% win rate is pretty impressive. Now, to achieve that win rate, it doesn't make a lot of money on each trade. So 0.5% per trade, but its edge is in its win rate. So this is a strategy where the win rate plays a major part in its profitability. I usually trade strategies that are the opposite. So the risk reward profile is what accounts for the profitability rather than the win rate. So I can trade strategies with a 45% win rate, but with a high risk reward. And that is how I tend to make my money. Whereas this strategy is kind of the opposite. We're taking small wins, but very frequently. Anyway, let's jump into the Pine editor and code all of this into Pine. All right, so here we are with a blank script, a relatively blank script. All I've done here is input my default strategy parameters. So we have overlay set to true, so we're drawing over price action. Our initial capital is set to $50,000. Our default quantity type for this strategy is set to percentage of our equity, and our quantity value is set to 100% of our account balance. So on each trade we get involved with, we're trading 100% of our account balance with no leverage. Our commission type is set to cash per contract, and the commission value is set to 0.005 cents per share, which, as I mentioned earlier, is Interactive Brokers' commission rate. And Interactive Brokers is probably one of the most common, if not the most common, stock trading platform. And so that's why we're using this as our default parameters. Now, if you've watched my previous video on the latest update to TradingView Strategy Tester, you'll know that they've recently added this bar magnifier setting. And I said in that video that we should always turn this on every single script we write. Now, that is true, but only on scripts that have a stop loss and take profit, like a fixed stop loss, fixed take profit, or entry limit orders. For a strategy that operates solely on candle closes, it's not necessary because there is no risk of intra-bar price action negatively affecting our backtesting results. If you're not sure what any of that just meant, make sure to go back and watch the previous video on this channel about the latest strategy tester update. I'll leave a link to that in the description as well. So we don't need bar magnifier for this particular strategy. Let's move on to getting our user inputs. So to save time, I'm just going to copy and paste some code I've already written because it's not important how the user input code is written, but we need several inputs here. So we need moving averages. One is the 200 SMA, the other is a 10 SMA, 10 period SMA. So a long-term and a short-term moving average. Our third parameter here is our stop loss percentage. So by default, that's set to 0.1 or 10%. So if price declines 10% from our entry, we exit our position. So that's basically a fail-safe stop loss. So if price never closes back above the 10 period SMA, we can still exit our trade for a loss to cut our losses short instead of letting our losses run too far. The final inputs here are just a start date and an end date filter. These are used for analyzing in-sample and out-of-sample periods. I'm not going to go into too much detail about statistical analysis of our backtesting results in this video because it will make this video way too long. That's a subject that deserves its own series, let alone video. And maybe I'll cover that in the future if you guys are interested in it. I'm no expert on that stuff. I'm not very good with mathematics, to be perfectly honest with you guys, but I am learning a lot about this stuff through Nick Radge's courses. And so in the future, I will probably record lessons on this super important subject of deep and robust backtesting processes. But for now, we'll keep things as simple as possible and just focus on the Pine code. So today's lesson is just an example, a strategy example, how to code a really simple concept into Pine code, and then test that theory in a simple but quick manner. The next thing we need to do is get our indicator values. So again, I'll just paste this code to save time. It's really simple. We're just getting two moving averages, two SMAs using ta.SMA, both based on the closing price source, and one with a 200, one with a 10 period. Now I need to replace these with our inputs so that we can adjust these moving average length in the settings menu if we want to. So now if I save my code, we should have these settings up here. There they are. And they have little tooltips explaining what each setting does. This is completely optional. I'm only doing this because this is a YouTube video script and I want you guys to fully understand what each user input does. Now, next thing we need to do is get our date filter. So again, I'll paste that code in. Really simple here. We're just checking if the current bar's time is greater than or equal to our start date and time. And is the current bar's time less than or equal to our end date and time. So this allows us to filter what trades get taken based on a date period. Now we get to the juicy part where we check our buy and sell conditions. So remember, the rules are really simple. The first thing we need to do before I get to the rules is save our buy price. So I'm just going to initialize a persistent variable. VAR variables mean that they don't reset on every single bar. It's a float type, so it's a number type with a decimal place. And it's going to be set to 0 by default on the very first bar in our chart. And then we'll obviously overwrite this with our buy price when we enter a trade. That way we can actually calculate our stop loss, that 10% decline from our buy price, so that we can exit trades that go against us. Now, our buy condition is the closing price greater than our MA1, which is our long-term moving average, the 200 period moving average, and is the closing price on the current bar less than our short-term moving average, or the 10 period moving average. Those are our basic entry conditions. But we also need to make sure that we're not already involved in a trade, because this strategy does not include pyramiding. So we want to check, is our position size equal to 0? If it's equal to 0, we're flat. And we want to check our date filter. So I'll throw in the date filter here. This just checks if the current bar falls within our 2 time periods. And that's it for our buy conditions. Now, before I continue, let's draw some pretty colors onto the chart. And by that, I mean our moving averages. So we're going to plot our MA1 and MA2 onto the chart, save my script. And now what we're looking for is price to be trading above the 200 period moving average and close below the 10 period moving average. And then we buy on the next bar's open, and we sell when price closes back above that 10 period moving average, or price declines by 10%. That's it. That's all we're looking for. So let's finish coding this out. We have our buy condition. Next up, we need our sell condition. And that, remember, is the closing price greater than our short-term moving average, or MA2. Let me indent these a little bit to make it easier to read. The second condition for selling is that we are currently involved in a trade. So to check if we're involved in a trade, we just check if position size is greater than 0. That means we have open contracts. And that's it for our basic sell condition. The next thing we need to do is check our stop loss. So our stop loss, remember, I'll start with calling it stop distance. And stop distance is going to be set to, and now this is completely optional, what I'm about to do next. It does make the code a little bit more difficult to read, but it will make our plots easier on the eyes. When I'll show you what I mean in a moment. But what I'm going to do is check, is our strategy position size greater than 0? Question mark. If so, if this condition is met, then we want to calculate our buy price minus the closing price divided by the closing price. This will give us the stop loss distance as a percentage on the current bar. So this will calculate the percentage decline from our entry. So let's say we entered on this bar here. I'll put a horizontal line there, that red line. This code here will calculate the percentage decline from this red line on each bar on our chart on a closing basis. So each bar that closes below this red line, this code will calculate this number here, 6.53% or minus 6.53%. This will calculate this as a positive number. So in this case, it would be 6.53%, not minus 6.53%. And we use that to check our stop loss. But before we do that, the next thing I want to do is calculate our stop loss price. So that's going to be, again, is our position size greater than 0? So are we involved in an open trade? If so, we subtract our buy price from our buy price multiplied by our stop percentage. So this is our stop loss percentage. Again, by default, it's 10% or 0.1. So this stop price will calculate, again, using this red line as our buy price. The stop price will be, by default, 10% below this line. So all the way down about here at 421.45-ish. So that's our stop loss. If we entered on this bar here, our stop loss is down here. And if we never get a bar that closes above this short-term moving average, but price closes below this red line, then we exit our trade for a loss. That's our stop loss. And then finally, the final thing we need to write out here for our buy and sell conditions is our stop loss condition itself. And for that, again, we check, is the position size currently greater than 0? So we're involved in an open trade. And our stop distance, so the current decline on a closing basis, on a percentage basis from our entry price, is greater than our I, and I stands for input. So input underscore stop percent. Then that means price has declined by our stop loss percentage point, and we need to exit our trade. That's it. Now, I know I went over that pretty quickly, but I'm trying to keep this video relatively short. You can always slow down the video or watch this a couple more times if this went over your head. But this is all we need to enter and exit our trades. The final thing we need to do is actually tell the strategy tester when to enter and when to exit. And that's actually really simple. So for enter positions, we're going to check if buy condition, remember Pine's case sensitive. So if buy condition is true, then we use the strategy.entry function to enter a trade. We need to give it an ID. So I'll just call this long. We're long only, remember? This is a long only strategy. I believe this kind of strategy is called a long beta strategy. So we're just trying to capture long only returns out of the market. And in this case, we're not even trying to beat the market. We're just trying to beat the market's max drawdown while maintaining a decent return, annual return. But anyway, the next thing is a direction. We need to tell the strategy tester which direction we want to enter our trade. Today, we're long only. So we just set that to strategy.long. That's it. We're entering our trades based on our buy condition. Now, the next thing we need to do is save our buy price so that all of this code here can actually be calculated. So far, we haven't actually saved a buy price. We do that obviously after we've entered a trade. So we need to put that code below our buy condition. Now, because we are entering on the next bar's open after the signal or the condition is met. So once our buy condition is met, the strategy tester, let's use this candle right here as an example again. So here we get a confirmed entry. We're above our 200 period moving average. We just closed below the 10 period short term. That's our entry criteria met. On this bar, that criteria gets met, but the strategy tester won't enter our trade until the next bar's open, which will be about here. So when we save our buy price, we don't want to save the signal candle's closing price. We want to save the next bar's open price as our buy price. So to do that, we can just check if we had a buy condition on the previous bar. So if buy condition on the previous bar is true, then we save our buy price as the current bar's opening price. And now we have our buy price saved and all of our metrics here will be calculated properly. And that's it for our entry conditions. The next thing is to check our exit criteria. To do that, really simple. We just check if sell condition. So if we have our standard take profit sell condition, which is that the current bar closed back above the 10 period moving average. So here, for example, we're trading above both moving averages and then we get a close below the 10 period SMA. We would enter long right here. We would hold our trade until price closed back above that 10 period moving average, and then we would sell on the next bar's open. So that's what our sell condition is. But we also have our stop condition, remember? So that can also be combined with our sell condition. So if we have, if we have a sell condition or a stop condition, then we want to exit our trade. And to do that, we can simply use the strategy.close function. We need to tell it which order to exit. In this case, that's our long order. So we're exiting our entry ID of long on this function here. And to make it clear when we exit for a profit or for our stop loss being hit, I'm going to add an optional parameter here, which is our comment. And the comment is just going to say exit. So normally it will just say exit if we close our trade. However, I'm also going to add on a conditional statement here that will say if, and let me make some more room here. If we had our stop condition met, then add on SL equals true. So this is text that's going to display on our chart, and it just simply says stop loss equals true. So we exited our trade because our stop loss was hit. Otherwise, add nothing to the string because we don't really care. This will just differentiate between trades that close back above the 10 SMA and trades that close below our 10% decline from our entry. And that's it. The final thing I'm going to do here is just overwrite our buy price to NA. This is purely for drawing purposes. We'll get to that in a moment. But now there's only 2 more lines of code to write and our script is completed. And that is, I'll just copy this code over to save time. It's just 2 more plots. So we're going to plot our buy price onto the chart so that we can see when the script bought, which price it bought at. And we're going to plot our stop loss onto the price so that we can see where the script will exit our trade if price declines beyond our stop loss. And I set the offset on our stop loss to -1 because the way we've written our code up here, it won't actually draw the stop loss until we've been in the trade for 1 bar. So we want to shift our stop loss line back 1 bar so that the 2 lines are drawing in sync. So I'll show you what I mean. If we save my code here, hopefully this compiles without any errors, and there we go, it definitely did not. So where is our error? It's on line 30. Oh, I didn't finish our conditional statements here. So for these 2 statements, we're just going to add NA on the end. So our stop loss distance, if we are not involved in a trade, our stop distance is going to be set to NA so that we don't draw anything onto the chart. So here, stop price is set to NA when we're not involved in a trade. If we don't do this, we'll have lines drawing all over our chart, even when we're not involved in a trade. We don't want that. So when we're not involved in a trade, we set our stop price to NA and our buy price to NA. And that way we don't have lines drawing all over the place. So now when I save my code, hopefully this compiles. There we go. There's our script completed. So let's find a good example here. Here's one that I was using before as an example. So here's our entry conditions met, trading above the 200 SMA, closing below the 10 SMA on this bar. We enter on the next bar's open, we enter long, and then we hold this trade until price closes above the 10 period SMA, or we close below our stop loss. Now in this case, that never happened. We actually, we tested our stop loss, we didn't close below it, but we did close back above the 10 SMA below our entry, and so this technically was a losing trade. So here, this bar closed back above the 10 SMA, we exit, we sell on the next bar's open, and so here we took a loss of about 3.7%. But there's our script completed. And if we open up the strategy tester, here's our metrics. So we have approximately a 12% max drawdown from 1995 until today. So I set my end filter to 2099. We're obviously nowhere near that yet. The way time's been flying this year, I feel like it won't be long before into 2099. But for now, we're trading up until the current day from 1995. And these are our metrics. So a net profit of 351% according to the TradingView strategy tester. Some of these metrics, I feel like the strategy tester calculates a bit weirdly compared to what I'm used to. But anyway, that's another subject for a different day. For now, we have a decently profitable strategy over 457 trades over several years with a decent max drawdown and a half decent return, annual return. Nothing spectacular, but considering that this would just be part of a portfolio of strategies, this is a really cool concept to investigate further. And now, before I wrap up this video, one thing that Joe speaks about in his video at the very end is talking about how we could expand on this strategy by adding extra rules or conditions to the strategy, because it is very, very simple. Now, I like to start my strategy development with a really simple idea, concept. A arguably too simple idea is better to start with, and then you build on that idea. So right here, we have a strategy that is profitable with a really high win rate. That's great. How could we improve the results of this strategy? What's a simple way we could improve this strategy? One way that I can see here that I thought of earlier this morning is it doesn't make a lot of sense to me to just exit as soon as price closes above the 10 SMA. I prefer to have a reason to exit my trades, and it doesn't have to be a very complex reason, but I prefer it to be a little bit more complex than simply just closing back above a moving average. And so what if we added, here's a perfect example. Look at this. We're trading above our 200 SMA. We close below our 10 period. We enter long on this bar's open. And then we exit on this bar's open after we close back above the SMA. What is this? This is like a, 1%, 2% gain? 1% gain. That's pitiful, considering how this market rallied from here. So what if we add a really simple exit reason, such as a lower close? So we only exit our trade if price is trading above the 10 SMA and we get a candle or a bar that closes below the previous bar's low, and then we exit on the next bar's open. Let's add that to our code and see how that affects our strategy results. So for this, I'm going to add it as a user input, and I'll just copy some code over to save time. So here we've added a new user input that says I underscore, so input underscore lower close, and it's a Boolean input. It's set to false by default, and this setting, exit on lower close, simply waits for a lower close before exiting above our short-term moving average. If I come down to our sell condition line of code here, I can add on one more little condition here. I can check, do we have our standard exit reasons or conditions met? So did we close above our short-term moving average while involved in an open long trade? And is I underscore lower close not turned on? So that would return true. So if we do not have that setting turned on, we will just exit when price closes back above the SMA. Otherwise, if we do have this turned on, then we want to check if the current bar's closing price is lower than the previous bar's low. That's it. Really simple. Just a couple of characters of code here. And let's see how it affects our bottom line. So I'll save that code. Let's look at this particular trade right here. If I come up to our options or settings here, bring it over here. We enter long here on this bar's open. Let's see what happens when I click exit on lower close. So now we stayed in this trade. We entered long here. Rather than exiting right here, we held our position until we got a price action confirmation that we should exit. Now it's a really simple confirmation, just a simple lower close. So this bar here closed lower than the previous bar. So we exit, we sell our long position on the next bar's open. And that turned a 1% winning trade into a 6% winning trade. And we still have our standard stop loss reason. So here's an example of a losing trade based on our stop loss. So exit SL equals true. We entered long on this bar's open after it closed below the 10 period SMA while price was technically above the long-term moving average. And then unfortunately, the market rolled over. But rather than holding on to our loser, we eventually exit our trade for approximately, I'd say this is like a 9.8% loss roughly. So let's drag that down. 9.5% loss on that trade, but now holding our winning trades for much longer. And here's a good example of why we use a stop loss back in the COVID crash on the market, when the market took a dive. This is why we use stop losses. But let's have a look here. Let's look for a trade that really played out nicely. Here's a good one. So we enter long here. We hold all the way up to this lower close. And then we get back into the market soon after that exit when price closes back below this SMA. So this is a really cool strategy. And now here we have a problem. Price did not close above our SMA when we got our lower close, and so the script did not exit our position. So that's this rule here. If you wanted to, you could play, I'm not going to in today's lesson, I want to wrap this up here, but if you wanted to, you could negate this rule when using the lower close rule, and that way the script would have exited up here. But because we have our prerequisite of price being above MA2, it waited until here to exit that trade. If you want to, that could be some homework for you, I guess, to go and edit this code to include that feature and see how that affects your results. But now let's look at our metrics. Our drawdown's gone up slightly, gone up by 2%, but our return has gone up significantly because our average trade profit has gone up significantly while still maintaining a very high win rate. Now, I'd need to do some more testing to make sure that I haven't missed something and this is actually giving out results that are accurate. But the whole point of today's video is not to give you a strategy to go out and test or trade, but rather a concept to think about, some examples on how you can achieve these things. And yeah, now I hope this helped you better understand the strategy development process. I hope it inspired some ideas for you to go out and play around with. And I'll wrap this lesson up here. As always, the source code will be below. A link to the source code will be below in the video description. A link to the original video by Joe that inspired this video. Basically, I just stole his trading idea and adapted it to suit myself in PineScript, but you get the idea. This is the strategy development process, basically, is going out, finding cool ideas, and then adapting them to your personality, your personal preferences. And then through the power of PineScript, we can really quickly test this stuff and decide if it's something that we are interested in pursuing further. This video is long enough as it is, so I'm going to wrap this up here. Thanks for watching. I really appreciate it. I hope you have a fantastic weekend, and I'll speak with you in the next video. Take care, and good luck with your trading as always.